Top of the morning to you traders. This is Chris Buss with Traders Profit Compass with your morning look at markets for Monday, October 18th. It's 6:15 in the morning as I'm starting the video. And as always, please run the video player at 1.25x for maximum efficiency. Okay, starting off a little soft here this morning. Equities are off between 4/10 and 6/10. Oil still remains strong with a bid under it, up 1.3% and pushing $83 a barrel. Over on the macro front today, pretty quiet. We've got an industrial production number and we've got a little bit of housing data coming out. Earnings are starting to pick up, but not a lot today. We've got Steel Dynamics and a bunch of regional banks after the bell. But then tomorrow, before the bell, we've got Procter & Gamble, Johnson & Johnson, and Halliburton. There's some other names as well. Those are just the big three that stuck out. And then after the market closes tomorrow, we got Netflix and United are the headline names tomorrow afternoon. But then going forward, it's really going to start picking up. I think we got Tesla this week and quite a few marquee names are going to start coming hot and heavy. So we're going to have to be on our toes about that. And remember what we talked about as far as looking for gaps that set up well for bracket trades. Get a lot of gapping action in earnings season. You can get a lot of nice bracket setups depending on what goes on in market conditions and all that kind of stuff. So okay, let's dive into it. US dollar has dropped out of this channel, and now really I think the places to watch are for a breakout of the range above 94.50 or a breakdown below this 93.50 area, and that would either break out, of course, or break down is going to determine the next leg, I would imagine. I don't think this thing is just going to come down and just kind of wander around. I think on a break of this, you get more of a downtrend down to this 91.75 level, and then of course on a breakout, you're back inside the channel and heading higher. So why is that important? Well, you can look over here. I think the most important thing for me is the commodity complex, which I remain really bullish on. But that if you got a rising dollar, that's going to be a big headwind for commodities. And jumping over to 10-year rates, remember early last week, well, Tuesday and Wednesday, we had really strong 10 and 30-year bond auctions, and that brought yields back in. But then Thursday and Friday, they brought it right back up into the range. And that's always kind of a tell for you. If you have fundamental catalysts, good, in this example, good auctions that bring rates in, and then they pop right back up after the macro event instead of following through, that's a sign that yields are being bid. So I think whether rates toggle in here between 1.5 and 1.63% for a while, we'll have to wait and see. But then a breakout would put us in the top end of this range, going way back into early in 2021. So if yields are going up, then TLT is going down. And we talked about this breakdown, back test, and then rejection. So see where it came right back in to the 200 and the bottom of this trading range. All that became resistance, and now it is backed away from those from that particular level here, like 146.50 right in there. So we'll see if this proceeds down and yields go higher, or we just tread water here for a while. VIX has come in real nice the last 10 days or so. We were up here in this high range between 20 and 25. They drove it down between 18 and 20, spent 4 or 5 days there, and then Thursday and Friday of last week they really crushed it, brought it in under 18, and actually tested the low down here at around 1575. So now we're in the, if you just divide it up into thirds, you've got a lower third, a middle third, and an upper end of the range. And so now the thing I always get concerned about is, now that we're in the bottom end of the range, really the only place to go is up, right? So you come down, you go back up, you come down, you go back up, you go down and you go back up. I mean, just right on down the line. Now that doesn't necessarily mean that it has to be a V bottom, right? Go rocket right back up. But it does mean, what are the real odds that they're going to drive this thing down to 14? I mean, I think, while it did happen back here, I think you can pretty much take this 1575 as the low end of the range. Support, support all in here and here and here. So now we got to just wait and watch and see if we get stabilization down in this range where it would be really productive for equities, or if we start popping back up with some turbulence. And remember, we're coming into the heart of earnings season, but also the heart of bullish seasonality. The back half of October and then into November, December, there's usually a rush for year-end performance. So Q4 tends to be a good time for equities, but like I said, we'll have to wait and see. Oscillators, I mentioned Friday, we're now up here around the 47 range on NYMO. And if we look over at the NASDAQ, not nearly as advanced as the New York. That's just testament of our two tech slightly underperforming the broader market with the higher interest rates and stuff like that. So, all right, let's jump into the indexes. We had that little gap Friday. Actually, we've had a couple gaps. This was Thursday morning, and then this was Friday morning. So we've got a little bit of air under the charts. The good news is we have popped back above the 50-day EMA off of the daily chart. So the way I'm looking at it is the charts are shaping up. As long as we can hold the 50-day on the daily, which is right down here at 438, I think things can stay productive. Now, what I wouldn't want to see is, this gap fill and then just keep on going south. I mean, I don't expect that, but we've got to have it at least somewhere in our head as a possibility. So now today, when we're going to open soft, we've got this open gap from Friday, and then we've got a nice layer here at 441, and then if that does not hold, then we've got a super big layer right here at 438, 439, where the top of this gap and the 50-day both converge. Here's just the information on a 30-minute chart. So if you're an active trader, you may be trading, the 5-minute or the 10-minute, 15-minute. This will give you a little bit more granularity on the levels. And so this morning, if we were to pull back into 444 and it looks like that holds, then you can use that as a pivot. But then I would have my stop just below inside the gap. If it goes in here, then you've got to get out of your long and either flip short or just reassess and wait for you to get a durable, tradable bottom. And that may come down here at this 441, 441.50 area where this prior high was. And you also can see that back here, that was a support level. And also, you've got this little area of value here on the volume over price bars. And you can see, and if you've been around for a while and are familiar with my work, you'll usually see support and resistance levels come off of these areas in the chart where you've got a lot of trading volume. And so over here, if you were to lose 444, I would imagine that this gap would fill and then come down to 441, where I would expect it to hold. Moving on to the Qs. Underperforming the last several weeks. Why? Well, this is still wrestling with a gap from right here, while the other indexes, SPY and IWM, have already filled that gap and are working at higher relative levels. So this morning, I think you use this 366 as your pivot. So if we come down here, you want to hold that prior level here. Here was a support level. And then you've got the 50-day EMA coming in right here at 365. So that would be an important level as well. And keep it in that same mode of thinking that I just talked about in SPY. You want to see the 50-day hold now that we've broken above. And that would be, to come down here and, lose it and then fill that gap would certainly ding your confidence as a bull. That doesn't mean it's not going to go higher after it does that stuff. But at least as far as it goes for today, you want to see that 50. You want to see that 50-day hold, because if the bulls are really in control, it should hold. It's supposed to hold. That's where people step in at the 50. So we're going to need to watch that. And then here it is on the 30-minute chart. We made some progress into that gap on Friday. And you can see where those levels are. And then you've got this big downtrend line where you could potentially see, if we went on a down move down to this 363 level, down to the top of the next gap, that's also where this downtrend line comes in. So you could think of that as a breakout and then your back test. That would be a real important area, because remember, like what we say all the time, you don't want to go back into a trading range once you've left it. So for instance, if it came out here and then came down and then this point failed, then you're back down into the soup, as it were, into this big volatile trading range. And then my expectation would be, just from a technical standpoint, come back here to either test this low or the low, this lower low right over here. And, I hope that doesn't happen, but, got to be ready for it. So I think here this morning, you're looking for the bottom of this gap to hold, and then you've got a little layer here right above it at 366. I mean, IWM, I'm still a bull. I'm still thinking that small caps, the cyclical names, regional banks are going to do well. So we had the big gap up on Friday, and then they faded it the rest of the day. So that was a kind of a crappy day. Now, if as far as an active trader, it's a great day if you got it right. You notice the stall out at 228, and then you had your stop just above. I mean, that was a very profitable trade. And if you got that, kudos to you. I mean, that's what active trading is all about. Not being too wrapped up in the, not having a big psychological investment of going one way or the other, but just to remain really fluid and flexible and saying, hey, it put in that high, but now it can't get above, so I'm going to try to go short with a stop, a little bit above the high. Then you didn't have to do anything the rest of the day. There weren't any little shakeout candles or rips and dips. It was pretty much a full-on fade. So now we're back down here towards 225 with the morning weakness. We're going to be down here in this 224 area, give or take. Be aware of this gap. And then we've got the 50 EMA flat as a pancake here at, where are we at? Yeah, right at 222. So that would be a level. And that lines up with the levels that we've been talking about the whole time, that there's this band here from 222 to 224 that goes way back, and that's basically halfway between the upper half and the lower half of the giant trading range on the daily chart. So holding this 221.50, 222 area is going to be really, really important going forward. And if price were to come back and then fail that level, as far as active trading goes, you got to short it right there. If this main support in the 50 EMA fails, that's where you've got to anchor short at 221.50 and then look for a move down to test. Well, actually, we've got 3 distinct lows that can be tested, or 4 actually. We've got a reach down right here. You see that. You see where that was support and support and support. So you've got a layer at 219.50. Then you've got a next location that could be tested at 217. We've got this low at 214. And then we got this low all the way back here at 210.50. So on a break of 221.50, if that were to happen, you've got your 4 downside targets here. Once you put on your short, and then you put your stop just above, and then if it kicks back, if you're wrong, then you get out with a paper cut. But after breaking above this midpoint line, you don't want to see price back off and go back down there. So here it is on the 30-minute chart. Same levels, really. We've got the gap, and then we've got these intermediate support levels on the way down. Now, before we get into the Fat Man trades, I want to welcome the new members. We've had quite a number of new members from the last week or week and a half. I want to welcome you to the channel and to the group. Really appreciate you being here. I hope the work is helping in your trading to have these levels pointed out where you can then focus all your energy and attention on execution. You know, the whole thing in trading is, once you've got the levels, what do you do with them? And so I hope that once you get some trust built up in my levels, that your execution will improve as well. So, and as a reminder, jump over in the show notes if you haven't done so already. There's a link to the registration page on the website where you can drop in your email, and then you get everything delivered right to your email box. You don't have to hunt on social media. I am pretty religious about sending to the group via email anything that's going on, and then sometimes I'll post that in social media, sometimes I won't. So anyway, that's that. And of course, longtime members, I really appreciate your sticking with me. I hope it's benefiting your trading. Okay, into Fatman. Facebook remains super soggy. Just, didn't do anything except go down on Friday. But you can see with all these tiny candles, sitting on 322.50, that's going to be your pivot. And I went over on the daily chart and pulled off the 200 EMA, which is right in this area. 223.65 is what I had off of the daily chart. So I think this 322.50 is going to be your pivot point for active trading. And the thing to really watch is if this 317 fails, then you've got to look to the downside after that. Why? Well, one, you'd be below the 200. That's bearish. You will have lost 322, this support level. That would be bearish. And then if you broke the prior low, that's always bearish. When you break a prior low, that means you're moving into a new range lower. So you would, at that point, if you had been a bull, then you've got to abandon that idea, being under the, breaking the prior low and also being under the 200. That wouldn't be a real great combination for those that were thinking Facebook was going to be bullish. Apple had made some nice progress on Friday. We had this move the other day and has broken back above 144 into this gap. I'm sure it's going to be down a little bit here in the morning with the soft numbers if that follows through to the open. I still think 144 is your pivot. If you lose 144, I can almost guarantee it comes back into 143, and then below that, then you're down back into this 140, 150 area. So I would really like to see 144 hold. If it doesn't, and then later in the day or whenever, when it comes back up through 144, that's your, or at least one of your potential long entries, right? Whenever you go down below a level and then reverse and come back through it, recapture a level, those are always potential buying locations. So if we were to, depending on how soft things get here, I would look for 144, 143, and 141.50 for potential support areas and potential reversal areas. Now, Tesla's been doing real well, and I think the EV space is perking up as well. If you go look at NIO, if you go look at that XPEV, if you look at ticker LI. That's another EV maker. Those all look real good. And we've got Tesla earnings, I believe, on Wednesday after the bell. So this may be the run up into earnings. What I did was go over to the daily chart and pull this 880 off as your next big upside target off the daily. Now this morning, you've got this large candle here, large closing candle from Friday that you can use as a reference point. You don't want to go below that candle. I think that's your pivot right here at 834. You want that to hold, and if you're not in it, that would be a place to be watching for a reversal on any kind of soft opening. If it doesn't go there, if it hangs out here in the middle and takes out your high from Friday, or your closed on the highs, 843, and it breaks that level, then you can buy that. And so then you would be long against 843 with a stop just below, and see if this can make that pre-earnings run up towards 860, 880 area. So 880 is your target off of the daily chart. Now on the downside, if you lose 834, then you've got this open gap here down at 824, and then you're back here to this breakout level at 805. So let's see if Tesla bulls can keep it rolling right up until earnings Wednesday. I just noticed it here. A nice line. If you were to put your cursor here on your chart and drag it forward, you've got a real nice line of support here, and you can even start at this point and track it up this way if you want to fine tune it. You can see a nice trend line here that would extend all the way up, and then if you were actively trading it, that would be a nice visual reference for you. I will put that in the next time that I update this chart. And then you want to just stay long against the trend line, and I think that would work really, really well. Microsoft has been strong, and we're getting up here towards the prior all-time highs. And so if Microsoft were to break out the all-time highs, I think you got to buy that. All-time highs you got to buy. No natural sellers. It's been performing well. So I would just key off of 305. I'd be long above it. And then if I were not in it, I would be looking for places to get long on any kind of opening weakness or pullback. Like 302 looks like a nice area to get long if it holds. And then down here towards 300 or this trend line, wherever it happens to come in, you see that, if there was a weak open today and you came right down in here to 299, 299.50, I would most likely be a buyer there, especially if I saw that level, price stop on a dime right there. That would be worth a shot, even just to come back up and fill whatever opening gap there is here this morning, have it come back up, and then with any luck, you would get a breakout tomorrow or later this week that would just take it into blue sky territory. Amazon was the talk of the town on Friday. This bar made a lot of people rich. I wasn't one of them, but big impulsive bar, and and it really never even looked back. It went into this gap here. So it was up $110. And I mean, the setup was there. What do I mean by that? Well, you had resistance here, and you saw that on Thursday, price could not get over this 33.15. So if you were even remotely interested in trading Amazon, you would have had an alarm right here at 33.20 and saying, okay, well, if it breaks out, recaptures this level from below, then it's going to be a buy. And that it was Friday, that's a perfect setup for a lottery ticket, right? Because one, you got the technical breakout, which is bullish to begin with, and then you've got it being Friday, so the options are going to be at their cheapest level, during the week, expiration Friday that we talked about. So then you can get a real cheap lottery ticket, and then after that, I mean, that's all luck, right? That's where the luck of the lottery comes. Does your ticket get punched? But in order to have a ticket punched, you got to have a ticket, right? You got to pay to play. So if you bought that $5, $10 out of the money call, then that was your massive payday. Now up here at the top, I would use this 34.10 as your pivot. You can see that we've got a number of open gaps above. So if it opens weak and pulls back, you want to see this 33.70 hold. Otherwise, you're coming all the way back to 33.40. So kudos to you if you got that lottery ticket. I know there was a couple people in the chat room that got partial. They saw it a little bit late, but still grabbed it, and they got a decent little chunk out of it, and that's great too. Sometimes you can't get the whole move, but you just got to be aware of it. So let that be a lesson for next time. You can put that on a little post-it note and incorporate those thoughts into your trading. Quickly, Google here filled the gap, sitting on the top, consolidating. I think you use 28.20 and 28.10 as your pivot points. Here you've got a large volume over price bar, so 28.10 you really got to have hold, or else you're probably coming back to 27.80ish. Netflix was soggy, but remember we've got earnings after the bell tomorrow. So if this 627.50 can hold, or worst case this 622.50, those would be locations where I'd be looking for a long, and then see if you can get a run into earnings. If it drops below 622.50, I wouldn't even mess with it. I don't think I'd be really looking to short it with earnings being tomorrow after the bell. I think that might be kind of a hard trade, because you never know when it's going to reverse, and with earnings right in front, the longest you're going to be able to hold that is a day, because you're going to want to get out of that before the end of tomorrow, so you avoid that earnings risk. And then lastly, SMH semiconductors. We had the double bottom with bullish divergence, and now we broke out of that double bottom structure. Here are the measured moves. So I got a measured move up to the low 270s. And so today I want to see 60 spot 50, 260 spot 50 hold. Why? Because you don't want to go back into this structure. That would kind of mess the whole thing up. That would make this breakout look fake. If we came back in here to fill this gap, then this double bottom structure really you'd have to say at that point the structure failed. So toggle off of 260 and a half. So let's wrap it up there. This has been Chris Buss with Traders Profit Compass. Have a good day of trading and talk to you next time.